You are a wonderful God. Oh, my creator. Only you are.
What's good with y'all, man? It's your boy Doyle back with another video, man. I know y'all missed me. You know what I'm saying? I know you missed me. I missed you. You know what I'm saying? You can give me a hug and shit, whatever, but it's been a while. It's been like 4 or 5 days, maybe even more. I don't even know. But yeah, I've been ducked off, man. I've been ducked off, focusing on me getting my mind right, man, being with my family, and it's been great. So okay, so I went on Instagram and I asked for requested videos because honestly, I'm running out of ideas. And if I run out of ideas, I'm not posting, and that's just what it is. Like, I'm not pressed for YouTube. I'm not pressed to be getting paid on YouTube and all that. I'm just not pressed for anything. I'm just focused on me. So whatever y'all want to see, then I will just upload it. So anything, so the requested videos that I kept seeing was, where do I start my fib? How do you understand market structure? When do you know when the trend is changing? I don't know where to start my fib from. And it's just like, all of those questions, like I constantly kept getting those type of questions. Now it was other questions, but this was the main one I kept seeing. And I'm just like, most people still don't understand market structure. And I'm like, okay, so you watch the sniper series, you watch all my Fibonacci videos, but you don't understand market structure. Listen, y'all, the foundation of fibs is market structure. So if you're just pulling your fibs out willy-nilly, of course you're gonna lose. Of course you're gonna lose. You don't even know when it breaks structure, when the trend is changing or when it's a continuation. You don't even know that. So you just see a fib point or right there, oh, point to point, and it's just like, did it break structure? No, it didn't. So it's like, bro, this is probably the most important video, bro, that you need to focus on. So the people that watch the sniper series, put your guns up, okay? Put your guns up. That we will not be showing no fibs in this video. It will not be no moving averages, no indicators, okay? This is probably the most important video. You need to take the video very seriously. When I say take a video seriously, you need to take it seriously because this is very important. You get market structure, you understand fibs better, you grow your account. Simple as that. So let's get into this video, man. All right, man, let's get it, bro. Okay, so first things first, man, you have to understand that the market moves in waves. It goes in a upwards motion, a downwards motion, or it goes sideways. So it's basically like it's just like a wave. So let me put on the Elliott wave for you guys. And I'm gonna explain to you exactly how the market moves. So the market will push up, right? Then it'll pull back down. Then it'll go past number one, then it'll push back down. And then it'll go up like this. This is an uptrend, okay? This is an uptrend, right? So when you're trying to decipher if it's an uptrend or downtrend, is it making higher highs or higher lows? This right here is a higher high, okay? If price go passes this point, that means that the market wants to continue down if it passes this point. If it doesn't passes this point, this is indicating that the market wants to continue up. So if you see that if price make a lower high and it passes this point, that means price wants to continue in its original trend, which is upwards. So this right here, let's take this off. Let's take this off. This right here is the foundation of fibs. Number one right here. That is structure. Once price passes structure, we're waiting for the retracement. So, okay, I know I said I wasn't gonna pull out the fib, but in this case, if it passes this point, we're gonna be pulling our fib from down here. Not down here because the fib point is here, because this leg breaks structure, which is number one. So we will start our fib from up here. Now let's adjust number 4 just so it can look more legit. So this is what fibs are used for, okay? Once it passes this high, we wait for it to pull back down to our entry to continue in the same direction. This is an uptrend illustration right here. So let me take this off. So once price is constantly making higher highs and higher lows, we're going to stay in the trade. Now this is when you will know if the trend is changing, bro. Listen to me and listen to me closely, okay? So it reaches this point, right? Say it does this. If it does this, you should probably get out of the trade or wait and see what the next candle do, or like see where the next movement is at. If it gets to this point right here and does this right here, let me just continue this out. Okay, so remember, this is the uptrend. It's making higher high. This is a high, lower high, higher high, lower high, higher high, and now it has lined up with that higher low right here. So if it's lined up with this point, we don't just automatically think like, okay, it's changing trend. No, we wait and see what this area do, because if this area, let me take this off, because if this area right here goes past number 5, then we're still continuing the trend. But if it make a lower high, it don't passes this low, now we starting to see that okay, my bad. If number 2 don't passes number 5 and they make a lower high right here, we should be anticipating for the trend to change. Now, if the market moves passes this point and it closes down here, this is indicating that the market trend has changed, which means we should be looking for fib shorts at this point. So this is structure right here. This is structure. Let me take this off. This right here, number 4 and number 1, this is structure. Once it broke past it, that's also known as market structure break. So it has broken the trend. That's what I mean by market structure break. It has broken the trend. So the trend was initially going up, it made a lower high, and then it broke structure to make a lower low. This right here is a lower low. When it's on a downtrend, it will make lower lows, lower highs, lower lows. So it closed down right here. So now when we see this, we will start our fib from number 2 to number 3. And as you can see, it touched our golden zone to continue its trend because the trend has changed. This is how the market moves. It makes higher highs, higher lows, higher highs, higher lows for uptrend. Once you start seeing this area that it never passes number 5, you don't initially say it's automatically a downtrend. Now we wait to see if it break these areas right here. If it break these areas, now we know that we should be waiting for a pullback to continue on a downtrend. Okay, you feel me? Now let's erase this, and I'm gonna show you another example of when the trend is reversing, going for a buy. This example is when the uptrend is, we're going on uptrend and then reverse for a sell. So let's go for a reversal for a buy. So we got a low, higher low, lower high, lower low, lower high, lower low. Okay, we got that down. We're on a clear downtrend. We're looking for fibs. This fibs is just coming out of nowhere. We're catching fibs. We're catching fibs. Cool. We're catching them. Cool. Right? Feel me? That's, you know what I'm saying? That's just what it is. Now, the market decides that it wants to do this. Okay. Now listen. This is a little more complex, but this is going to help you. So, if you would have took this fib, right? It broke this structure because this is a low. Because remember, the market moves in waves. Damn, my bad. So, it broke this low. It broke this point right here, saying that it want to continue to trend, right? So, right here, it touches our entry. It hit TP1 or whatever, just whatever. This is an example. It hit our golden zone. It touched TP1 or it almost touched TP2, right? And then it stops us out. Remember what I said on my sniper series. When it touches the zero and it closes past the zero, the trend has changed. So if you see that it's going past your 100% and it still is constantly making higher highs, you know that the trend has changed. So this is also structure. That is also structure. So as price breaks past this point, that is called market structure break, which means that it wants to continue to trend up. So this is a reversal. So you will start your fib from right here. Since it broke this number 4, since it broke number 4, we're going to start our fib from at this point, not from down here, from right here. Because this is the leg that broke structure. Not this leg didn't break it because it pulled back. This leg broke structure, so we're going to use this leg. So this is where you will start your fib from. You will enter right here to go for a buy. That is how the market moves. Once you start seeing that made a swing high. So let me take this stuff off. Let me take this stuff off. And I'm just gonna put lines so you can get a better idea. So you go a line, you go a line, go a line, here go a line. Okay, so let's go real slow. So the market goes down, makes support, pushes back up, breaks support. Okay, pulls back up to support, to resistance, and then breaks support again. So the market is constantly breaking these structures. When you see wherever the line is at, that's where the structure is at. So once it break through it, that market structure break, pull out your fib. It goes back to support, turns into resistance, breaks this support for number 3, market structure break. You can pull out your fib. You can't really, the bad thing about fibs is you don't know when a reversal is going to happen. That's the only bad thing about fibs. So once you can get good at okay, the market has been pushing down for a while, let me not look for fibs because it's overbought or oversold. This is a possible reversal area. You can avoid taking fibs in those reversal areas because right here, in this area right here, let me take this glue off. In this area right here, this is hard to predict because since Fibonacci is a trend strategy, it's kind of hard to decipher if this area is a reversal. That's the only tough thing about fibs. So if you can be really get good at knowing when an area is overbought or oversold, or if you add a resistance on a higher time frame or support at a higher time frame, you can avoid these type of setups, these type of fib setups, and instead catch the reversal fib to go in a reverse area. So honestly, this is kind of like counter trend in a way, but you just know that this is a major reversal area. So it's just that's the only bad thing about fibs. because you can constantly try to trade fibs, but if you in a reversal area, you're gonna lose. So again, wherever you see the lines are at, price is breaking structure. When it breaks this lower high and it makes a higher high, because this is still a lower high, it broke past this point. So if this leg, this is a strong leg, just really think about this leg. This leg broke this structure right here and this point. So it's like, okay, this is a very significant leg to start your fib from. So that's basically market structure. Is the market making lower lows or lower highs? This is a lower low. This is a lower high. This is a lower low. This is a lower high, because this high is lower than this high. This is a lower low. This is a lower high. This is a higher low. See how I just changed? This is a higher low. This is a lower low. This is a lower high, because this high is lower than this high. This is a higher low because this low is higher than this low. This is a higher high right here. Okay, this is a higher high because this high is higher than this high and this high. These are his highs. These are lows. This is a lower high because this high is lower than this high. I know it's kind of confusing, but just keep watching this video over and over and it's going to make more sense, man. So this is a higher high because this high right here is higher than number 1 and number 4. This right here is a higher low. Why is this a higher low? Because this low is higher than this low and this low. And this is a higher high because this high is higher than everything. So I hope this can help you, man. I'm going to show some real examples on candles so I can show you like real candles and how you can decipher if that's a swing low or swing high. So let's take this off and let's see this in live action. Okay, so let's just use this example right here. So the market, let's just look at the market. The market is making, what the hell? Okay, let's take that off. I don't even know why that even showed up. So let's just look at the market. We're not even gonna hop on the line chart. We're not gonna hop on it. Is the market making lower lows or lower highs? Okay, so remember, let's just put the line. Let's put the line on, just like how we did in the illustration. So this is a support area. Remember, this is a support area. Price broke past this point. If we see this, we like, okay, it broke support, which means it broke some structure going down. So what are we waiting for? We're waiting for a pullback to make a lower high, bro. Since this is a high, remember, this was the high, and it broke below, and it just made a low. It just made a lower low because this low is lower than this low. We're waiting for a lower high to show up. So if we're waiting for a lower high to show up, this is where we would enter for our fib right here. So it's basically like it breaks support and we're trying to trade off of the resistance. So support become resistance. So this is where you would start your fib from, like right here or something. It didn't reach it, but some people that trade the 50%, whatever, however you trade fibs, you would be entering right here. So now the market is telling us that it want to go down. So it's making lower lows, lower highs, lower lows, lower highs. It didn't show us a lower low, but it wicked up here. This is still a lower high. So we're like, okay, we still on downtrend. It made a lower low. This is a swing up, lower high, lower low. Now let's pause right here. Let's pause right here. Remember, this was a lower low. This was a lower high, because this area is not higher than this point. Then it make a lower low. Then it do, oh crap. Then it does this. This is a very important move right here. This move right here is very important, right? This area. Matter of fact, I wanted to circle this just so you can really understand why this area is so important. This right here, it made a big push up. Why is this area so important? Is because this is market structure break. Let me explain to you. So remember, we're gonna put the little line on. So this was resistance, right? Because this was a lower high. This is a lower high. This was a lower low. This is a lower high. I mean, this is a lower low, and this was a lower high. So we got our little downtrend. We got our downtrend. We still think that it's a downtrend, but the market decides to push up past the white line. It really just passed the lower high. Once it passes the lower high, now this is this turns into a higher high. Once we see that this high is bigger than this high and this high, the trend has changed, which means we should be waiting for higher lows. Let me say that slowly. The market was on a downtrend, right? It broke past a lower high. Once it broke past a lower high and created a higher high, what we should be anticipating is a higher low. And right here, is this low lower than this low? Ask yourself that. Is this low right here lower than this low? No, it's not. So this is considered a higher low. So since we understand that the market has shifted for a buy, we will start our fib from right here to right here. As you can see, it touched the golden zone and went up, right? So let's take all these blue lines off. Let's take it all off. Because like once you understand this, it's gonna be so much easier. You will not need no fib points. You can start really going crazy, okay? So once it made a lower high and it broke past this point, we're making higher highs, right? Now, if you look back, the market is still bearish. So we still need to see some more higher highs to be really convinced that this is going to keep going. In this case, right, they made a higher high and then it made a lower low. So overall, this market is still bearish after it made this move. We convinced that it's an uptrend, but once the market pushes down below these points, it broke this structure, and then broke this structure. Once it broke past of these two lows, we know that the market is still wants to push down. So once it breaks below here, this is called market structure break, which means that the market want to continue for a sale. It want to keep going down. That's basically market structure, man. Where is the lows and where's the highs are at? Now, this, let me go and try to find something else. Again, let's look. Here go another. Here go a high, lower high, higher low. I mean, my bad. Higher high, higher low, higher high, higher low, higher high, higher low. Okay, that's the uptrend. It's just high, higher low, high, high, higher low. It's just like once you keep seeing higher highs, you know that it's in an uptrend. You don't have to question it. So right here, this is called consolidation, right? This is like they're trapping people because, okay, it's making higher highs, but then it also made a lower low. So it's just like, what are we doing? This is an up and down motion. This is where we mostly lose at, because we would think that this is a buy and it stops us out. This is called consolidation. This is where we lose our most money at, because if you take this fib off and you see that right here, this is structure. price goes past this point. This is like, these are like little highs, right? This is like resistance. It breaks past this point, and we will start our fifth from down here to go up. But we got stopped out. So it's just like, is this a downtrend or is it an uptrend? We don't know. This is consolidation. You know what I'm saying? We don't really have no control over that. But let me see. Okay, so right here, we go another situation. So the market is pushing up. So it's, you know what I'm saying, it's moving in waves. It's moving in waves. And then it do this big move down. When it do this big move down, this is breaking this structure, breaking this structure, and it's breaking this structure. When it breaks structure to the downside, we're waiting for a lower high, because this is a high and this is a lower high. I mean, my bad, this is a high and then it just made a lower low, because this low is lower than this low, and this low. So it's made a low, lower high, because this high is lower than this high. So we're just like, once it breaks structure, wait for the retracement. That's it. It broke all those lows. You wait for the retracement. Golden zone, take your profit off and let it go. That is market structure, man. Like that's literally it. Okay. Again, lower low, lower high, lower low, lower high, lower low, lower high. Like, these highs are not passing the previous. It's not passing the previous, so we know it's a downtrend. Once it reverse, like right here, this is a perfect example. Market pushes up, make a lower high, make a higher high, make a lower low. Okay, this wick is this point is lower than this point, right? Then it make a higher high. Now at this point, if I see it made a lower low and then made a higher high, I'm confused. Now I'm just like, okay, this is consolidation. How can this wick be lower than this point? Like, if I see this, if I see that it made a lower low, I'm waiting for price to make a lower high, which means I don't expect it to go past this point. I don't expect it to go past this point. So if it does that, I'm like, okay, I don't really know what it want to do, because when I see a lower low, I'm expecting for it to be a lower high. I'm expecting this high to not be past this point. But in this situation, it does pass this point. So now I'm like, okay, this got to be consolidation, because it's showing higher highs and lower lows. That don't make sense. So if I see this, I'm waiting for another structure to be broken. Let's wait and see what the market do. So it breaks structure. Now this move right here, man, this created the real trend. Let me take this off. This move right here broke everything. It broke everything, bro. So once it broke past, my mind is, okay, this is a downtrend now. So it made all of this. We don't know what it want to do. And then it broke past it, showing me that it want to continue down. That's all market structure is. If it's on the uptrend, it's making higher highs and higher lows. If it's on a downtrend, it's making lower lows and lower highs. And when it's a reversal, it will start disrespecting all those higher highs far as a buy. And if it's a reversal from a sell to a buy, it's gonna disrespect all those lows, those lower lows. So please rewatch this video, man. You're gonna be confused. I know you are, because a lot of people don't teach market structure, man. These MLMs, they don't teach market structure, okay? A lot of these instructors don't teach market structure, and this is the foundation of Forex. Once you understand market structure, you can learn any strategy. It don't have to be Fibonacci. Candlesticks and market structure is the foundation of Forex. If you don't know that, you don't know how to trade. Straight up, you don't know how to trade, bro. So please watch this video 10, 20 times until this stick in your head, bro. You have to understand higher highs and higher lows as far as a uptrend, and you have to understand lower lows and lower highs for a downtrend. And you have to see the reversals happening when it does break structure. So that's all I got, man. I hope you learned something. Watch this video 3-4 times, bro. Please. So you can get better at fibs, because people are winning and then it's a lot of people that are losing. And they're like, man, bro, just help me out. And I'm just like, you need to learn market structure, bro. That's the only way you're going to learn. Because if you don't learn this stuff, you're going to get stopped out on a lot of winning trades. You're going to be stopped out on a lot of losing trades. It's just going to be like, it's going to be tough for you to really understand fibs if you don't understand market structure. That's the foundation of fibs. So I hope this helped you. Study, man. That's all I got. Peace and love. I'm out.